own or the business own and the amount yet to be received.
No, I am talking about how it is shown in the balance sheet. It is shown in two parts.
You mean current assets, non-current assets?
Lovely. So your assets are classified into two parts. One is non-current asset and one is current asset. Do you know the distinguish between the two?
Yeah, the non-current is you hold them or own them more than 1 year.
Lovely. And current assets?
Is 1 or less than 1 year.
Okay. Do you know the names of the current assets?
Cash, cash at bank, cash at hand.
Let's start with closing inventory. Okay.
Okay, closing inventory, and
Then,
then cash, trade receivable.
okay, trade receivables just like that or something you have to adjust?
Uh, I'm not sure.
I just explained you on top.
You mean that thing? That means we have to put the one
Minus,
shown in the balance sheet.
yeah,
Means
minus.
trade receivable minus new bad debts gives you the net profit, net trade receivable minus new PDD.
Okay, very good. So current assets, you have your closing inventory. You said you
Trade
have the trade
receivable,
receivables. What else?
cash in hand and bank, cash in bank,
Okay. And
and other receivables,
what comes
as
in
we
other
said.
receivables?
Outstanding income, prepaid expenses.
Okay, you have cash in hand, you have cash at bank, and you have other receivables.
Yeah.
What about non-current assets?
Non-current assets.
What is non-current asset?
Machinery.
First, tell me what is non-current assets.
It's the assets that we own or hold more than 1 year.
Okay, and
And
it
is it?
undergoes depreciation.
Okay. Yeah.
What do you mean by saying that it undergoes depreciation?
Means over time it loses its worth.
Over the time it loses its worth. Can you give me a definition of depreciation?
Uh, like the one that I did now.
Depreciation is the cost of using a non-current asset. Okay?
Okay. Yes.
Okay. Now give me examples of non-current assets.
As I said, machinery,
Hmm.
and then it says vehicles,
Hmm.
equipment,
Hmm.
furniture and fixtures,
Hmm.
loose tools,
Hmm.
goodwill,
Hmm.
patent,
Hmm.
trademark,
Hmm.
copyright,
Hmm.
premises, and
Leasehold premises, land and building.
yeah. All right.
Okay.
What does it
So
mean by loose tools?
loose tool means suppose you have a business of furniture. Okay.
Uh huh.
So you're going to have those hammer, nail,
Yeah.
screwdriver, the drilling machine and all. Okay.
Ah. Okay. Okay.
So
Yeah, I
that is your
understand.
asset with the help of which you make your goods.
Okay. Yeah.
Okay. So loose tools are small value items, but they are your assets.
Okay. Yeah. I
Okay.
understand this. Thank you.
So your assets are
Yes.
classified into non-current assets and current assets, right? So when
Current
you make
assets.
your balance sheet, okay, one more thing you tell me, what balance do assets have?
Debit.
Debit balance, lovely. Why do they have a debit balance?
Because it's either something we own or something yet to be received.
Okay, I'll tell you why do they have a debit balance later. So when I make a
Okay.
balance sheet for small sums or for getting the balancing figure, always remember that this is a T-shaped balance sheet that we make. Okay?
Okay. Yeah.
We write our assets over here.
Mm-hmm.
We write our liabilities over here.
Yeah. Credit side.
Okay. Then what do you do? Your non-current assets
Mm-hmm.
plus your current assets will give you what?
Net asset. No.
Total assets.
Total assets.
Your non-current assets plus your current assets will give you what?
Total assets.
Okay. Total assets is always equal to what?
Total liabilities.
It is always equal to total liabilities. Do you know the three sections that come in the liability side?
You mean current, non-current liability, and then that's that. Aren't they only two?
One is current liability.
Yeah, one is non-current,
One is non-current liability.
and I'm not sure about the third one.
Think. Will it be capital?
Yeah, it might be. Yeah.
Okay.
Okay.
So if you
Yes.
want to find capital, with the help of all this information, can you give me a formula for finding capital?
Means total assets minus total liability. I mean, no. Total assets minus non-current plus current liability.
Minus non-current liability minus current liability will give you what?
Capital.
Capital. Very good. So if I want to have a formula of finding capital, how will I write it?
Total assets minus non-current liability minus current liability.
Okay, lovely. Do you know what comes under current liabilities?
Yeah, I know.
Tell.
Bank overdraft,
Hmm?
and then short-term loan. For
Hmm?
current liability is short-term loan, and then
Are you
trade
referring
payables.
Are you referring somewhere or you know it by
Sorry?
heart?
No, you made us. No, you made us. You know, you made us remember these. These are I know.
Okay, tell me. Bank overdraft,
Yes, and then trade receivables, short-term
trade
loans.
receivables.
No, sorry. No, trade payables, right?
Okay.
Yeah, and then short-term loans, and what was it? Wait, other payables.
Okay. Short-term loans and other
Mm-hmm.
payables. What comes in other payables?
It's the opposite of what was in the income. So it's outstanding expense and pre-received income.
Yes. What is the meaning of trade payables?
Trade payables means we have gotten the money, but yet we still haven't given the service or the goods. No, we haven't given the goods.
Think properly.
Yeah, we have gotten
Trade
the
payables.
money.
What was the meaning of trade receivables?
Trade receivable is like when the people whom you have sold goods on credit.
Okay, so what will be trade payables?
Means they sold goods to us. We
Yeah.
bought goods from
So
them.
there we sold the goods on credit. So
Yeah.
here we will
Buy it on credit.
purchase the goods on credit. Okay. So what is the
Yeah.
meaning of trade payables?
Means we will buy goods from them. We'll purchase them.
People from whom?
We have purchased goods on credit.
And
Money yet to be given.
We have purchased goods on credit. Money yet to be given. Okay.
Yet to be given.
Or yet to be paid.
Yes.
Can you give me definition of assets? Can you give me definition of assets?
Sorry?
Can you give me definition of assets?
Can you say it again, miss?
Can you give me the definition of assets?
Definition of assets. It's the properties that the business owns, or the good. No, or it's the things that business yet to be received.
You need to know.
Sorry.
2 lines that you need to know. Property that the business owns and
yet to be received.
Amounts yet
From the
to be received.
amount yet to be received by the business.
Okay. If I ask you the definition of liabilities.
The liabilities is amount yet to be given by the business.
Amounts yet to be paid.
Okay, yeah, amount yet to be paid by the business, and
The owner's capital.
yes, the capital.
Capital is also called owner's equity.
Okay, yeah.
Okay. What is the definition of trade receivables?
Receivables is the people whom we have sold goods on credit.
Okay.
And the money yet to be received.
Trade payables.
Trade payables, people whom we have bought goods on credit, and the goods is yet to be received.
Goods is yet to be received.
Yeah, the money is gone.
Amount is yet to be received. Okay. Sorry, amount is yet to be paid. Okay. So now if I ask you to prepare a format of a balance sheet, will you be able to prepare it? If I ask
Can you say it again, Miss?
A format of a balance sheet, will you be able to prepare it?
Yeah, I think so.
Try. I will then share my screen. Try what you have and figure out, but I want it in a vertical way. Then I will show on my screen.
Okay, I mean, what exactly do you want me to do? Like, do you want me to write the,
Statement of financial position.
Okay. Okay. All right.
Do you first want me to show you once?
Sorry, Miss?
You first want me to show you this once?
Can you ask again?
Show you once.
Okay. I mean,
so with this, I am putting
it's fine. It's
income
better.
statement also to you. So we are doing the balance sheet format or the statement of financial position format. Now just remember that when I'm doing the statement of financial position format, it is always as at a particular date. Okay? It is always
Okay.
as at a particular date. Now see, you would have 3 columns.
All right.
The first column would be the cash, costs, depreciation to date, and net book value. What would the column be?
Cost, depreciation in date,
to date, net book value.
net book value.
First,
Yeah.
you will have your non-current assets. Do you know the names of the non-current assets?
Non-current assets, yes.
Say.
Plant and machinery, goodwill, and then what was the other thing? Wait, yeah, you said loose tools, and then vehicles, and equipments, and then premises.
Okay, lovely. So few non-current assets will be written over here. Whatever will be the cost of the asset will come on the cost column. Depreciation
Okay.
to date. When I say depreciation to date means the accumulated depreciation is subtracted from the cost and you get the net book value. Okay? Net
Yeah.
book value. Then your other assets, subtract the depreciation to date, you get the net book
Net
value.
book value.
Other assets, subtract the depreciation to date, you will get the
Net book value.
okay. Then again you say other assets, subtract the
Depreciation to date to get
you
the
get
net
the
book value.
very good. Then you would do the total of all this costs. You write the total over here. You will do the total of all the accumulated depreciation. You will write the total over here. Costs minus accumulated depreciation. What does it give you?
Cost minus accumulated depreciation, net book value.
Net book value. Then you close this. Just remember, when you close it, you just close this up till here. Okay?
Okay.
This column
Yeah.
will continue.
Mm-hmm.
Non-current assets plus what?
Plus current assets.
Plus current assets. Give current assets.
1 second, let me finish writing. Okay. Current assets are 1 second, we just talked about it. I forgot them. We said other is no. Short, not the short. Cash in hand. Yes. Okay. Cash in hand, cash in bank. Cash in hand, cash in bank, and then trade payables. No, trade receivables.
Trade receivables just like that, or you have to adjust something?
1 sec. Yeah, the current assets is closing inventory. Yeah, okay. Closing inventory, cash in hand, cash in bank, and trade receivable, as I said. And
Trade receivables has to be adjusted for two things.
the trade receivable, yeah. Trade receivable minus the new bad debt gives you the net trade receivable. Minus provision for doubtful debts give you the trade receivable for the what was it, the thing
Shown in the balance sheet. You see everything
yes.
I'm writing in the second column. Can you see this?
Yeah, I can see them. Trade receivable.
Okay. Then cash in hand, cash at bank, and
other receivables.
Other receivables is made up of?
Outstanding income and prepaid expenses.
Okay. You will do the total of all this. You'll make a line. Where will you write it?
What do you mean, miss?
Where will you write this total? Which column you will write?
The total net book value?
No, this is not net book value. Yeah, you will write it in the net book value column, just next to this X, okay? Just next to this.
The total of it.
Then what will you do?
Okay.
This is your total non-current assets. This is
and
your
then
total
you
current assets.
add both of them together to get the total assets.
Yes, very good. I hope you've completed up till here. If not, I'm waiting for you.
All right, just 1 second, I will complete. Okay, done.
Okay. After your total assets, now which section you will take?
Non-current liabilities.
Okay. First is capital, then is non-current liability, then is current liability. First is what?
Capital.
Then is non-current liability. Then after that is?
You mean capital or current liability?
Okay. So the balance sheet will just go like that in the same way. Below this only, you will leave one line and first you will write owner's equity. Or it could be owner's capital. Okay?
Okay.
So how do you get this owner's equity? You get it as capital at start. Add the profit for the year. Less the drawings will give you capital at the end. Okay. Now this all has to be done in the second column. Just give me a minute.
Good morning, ma'am.
Good morning. Jonathan, it was 10, right?
Yes, ma'am. I forgot to check.
You missed so much. Anyways, we are doing the balance sheet format. Yes, the liability section of it, start memorizing from here. So when we are doing the balance sheet format, the liability section, how does it go? Come on, tell me.
Owner's equity.
Owner's equity. Owner's equity is made up of?
Capital at start and profits for the year.
Then you will add the two. Then?
Less drawings and capital at the end.
Less drawings, you will get the answer, that is capital at the end, and your capital at the end is your owner's equity.
Yeah.
Okay, again, can you all say?
Okay, so capital at start plus profits for the year. Less drawings.
Less drawings and capital at the end.
Yeah.
Again, can you all please repeat?
Capital at start.
Yeah, plus profits for the year. Minus drawings.
Then.
And capital at the end.
Drawing and capital at the end.
Okay, so your liability section, the first thing starts with your owner's equity or your owner's capital. Okay?
Yeah.
Now, this is one thing I want to show you over here is that instead of doing this, okay, instead of doing this over here like this, we also have an option to make a capital account. Which account I'm talking about? Making a capital account.
Yeah.
You all know how to make a capital account, right?
Yeah, total asset minus current liability minus non-current.
Capital at start would come over here.
Okay.
Drawings will come over here.
Okay.
Okay. Profit will come over here.
Yes.
And you will get this amount as balancing figure. The amount that you get as balancing figure would be capital at the end.
All right.
This is more feasible rather than showing this all over here. You can make a capital account. You can make a capital account in the working and just give this figure. I will show you how to calculate this figure later. But right now we will complete with the balance sheet format. Okay?
Okay.
So is this done with owner's equity?
Now it's turn for the non-current. Yes, now it's the non-current liability.
What is the meaning of non-current liability?
Means the liabilities that we will hold more than 1 year.
Yes. So it would be bank and other loans. I'm just writing one non-current liability. If you see, if there is only one item, the amount directly comes in the outer column.
Yeah.
Okay. After that, what do we have? Current liability. After that, what do we have? Current liability. What comes in current liability? What comes in current liability?
We said it. Bank overdraft, trade payables, short-term loans, and other payables, which is outstanding expenses and pre-received income.
Outstanding expenses and pre-received income. Bank overdraft.
Yeah.
So I'm writing this in the second column. I will total all this and write it in the outer column. Always remember this total plus this total plus this total will give me what? Will give me what?
Total assets? No, total liabilities.
This will give me total liabilities. And at all point of time, my total assets will be equal to my total liabilities.
Yeah.
Okay. So if you've made the balance sheet format, just send it to me. Have you all made the balance sheet format?
Yeah, I am writing last two things, miss. 1 second.
So first is the asset section, then is the liabilities section, and it all flows in one go.
Okay, yeah, I have finished it.
Can you post it?
Mm-hmm.